Good morning, Canberra, for Cam's Mortgage Minute on Tuesday, July the 9th. Hey, as they say, the old adage, and I've said it before, the only thing in life that's constant is change. Well, guess what? We're going to see more coming from, more mortgage guideline changes, more tightening of the TDS, GDS requirements. And what TDS is your total debt service ratio, gross debt service ratio, and the things that impact it. And CMHC announced just a few days ago, well, actually just almost a week ago, that they are going to be making some new changes, and these changes are going to take full effect by December 31st, 2013, so basically at the end of the year. That's not to say that lenders haven't already started adopting some of these guidelines and some of these prerequisites. Basically what they are is things like variable income. So if, for example, you make things like bonuses, you're making tips, you get overtime, you get things like that, you have investment income, and you want to use that income towards purchasing a house, you need a 2-year average. Sometimes in the past you could get away with less, but if you've got a CMHC insured mortgage, lenders are going to be looking for that 2-year average, and that's the number they're going to work with. Rental income, if you've got a rental property that is not owner occupied, in other words, it's a standalone rental, they're going to be looking at all of your costs related to it, and they're going to be seeing if you are actually declaring it on your tax returns. That's right, folks. They're looking for rental income declarations, and they want to see it on your taxes, which you should be filing. And if it's not there, well, guess what? That's not going to be utilized. The only exception to this, of course, is when you're moving out of an existing property and buying a new property. Well, obviously you don't have rental history on it, and there's a workaround for that we have, so that's not a problem. Another big change, guarantor's income. A guarantor in the past, their income could be used to help with your ratios and help overall strengthen the deal. However, from now on, their income cannot be used in the gross debt service, total debt service ratios unless that person occupies the home and is the spouse or common law partner of the borrower. So if your parent is willing to co-sign or guarantee the mortgage or help come on board, their income can't be counted unless they're planning on living with you or they're your which obviously they're not. So what they've essentially done with this prerequisite is saying we can have the strength of the guarantor, we can look at their credit and use that to help strengthen the deal. However, we can't use their income. So your income has to be standalone on its own. So you need to qualify income-wise to start out. Unsecured lines of credit. In the past, what we could do is we could use a small percentage of what was outstanding, but the CMHC has now mandated a universal policy that no less than 3% of the outstanding balance will be used. So, for example, let's say you have a $10,000 credit card. Now we have to use $300 a month to debt service that payment. So in other words, we have to factor that $300 a month into your overall debt servicing. You may have minimum requirements of only $50, $100, whatever. It's irrelevant. That's the number we need to be using. Secured lines of credit. Now in the past, with a lot of secured lines of credit, even with the CMHC insured mortgages, we could use the interest-only portion, but no longer. From now on, the lenders have to use the equivalent of payment that's based on the outstanding balance amortized over 25 years, and that payment must use either the contract rate or the benchmark rate. So that's going to be another one. It's going to definitely make an impact on people that way. The other thing is heating costs. Now, heating costs were all over the map before, and what they're actually wanting lenders to do now is obtain the actual cost records for a property. So no longer will be able to use an arbitrary number. They want to see some history. They want to see that heat expense be a realistic expense, so that way the actual number is used. Now, some lenders have even gone to a formula. What they're doing is they're taking the square footage times 75 cents divided by 12 months, and that's giving them a number. Now, I can tell you it's a lot higher than past methods, so definitely another thing that's affecting the ratios. So bottom line is the new debt service ratios, which the government announced last year, basically for the best borrowers were 39 GDS, which means, again, that's your mortgage payment, your property taxes, your strata fees, that sort of thing. That number can't exceed 39%, and 44% was all of your debts combined. So that's for the best borrowers, and that's not on everybody. So if your credit is less than stellar, you're not going to get those ratios. So again, definitely things that have tightened up. And these new guidelines, which are going to be in full force if, well, like I said, a lot of lenders have already started implementing them behind the scenes, are going to definitely make those ratios go up and creep up and be tighter and tighter. So what's the bottom line? Well, bottom line is it harks back to what the government's constantly saying: affordability, affordability, and we want to make sure you're not overstretched and that you can take a shock to the system when rates go up. So, good news, bad news, hey, you know what, it depends what perspective you're on. If you're saying, look, people should be very conscious, they shouldn't overexceed, they shouldn't do those things, absolutely. Is it going to push some people out of the market? Yes, potentially, because definitely going to make it harder for some folks. The challenge I find, the interesting paradox here in Victoria, is that sometimes what people are going to be faced with for a mortgage payment that they don't qualify. However, unfortunately, they're paying in excess of that for rent and managing just fine. But the guidelines are the guidelines, and they make those things a little more challenging. Again, like I said, these are CMHC insured guidelines. So if you have a conventional mortgage, for the time being, these rules don't necessarily apply. However, some lenders will be using them conventionally. It really is a hodgepodge as to what lenders choose to do. So if you need help mortgage-wise, hey, definitely give us a shout. It's Cam Brar at the Auxilium team. We're always ready, willing, able to assist, and we'd love to help you. And no matter where you are in this fine province, we can certainly do that. Take care and enjoy the sunshine. Hopefully it's shining where you are.